Something just changed in XRP that matters more than it looks. The market's attention is on the latest price pullback, but behind the scenes, a key piece of U.S. legislation has entered a phase that could shape how institutions view XRP for years, not just weeks. In this video, we'll break down what has changed, why the Senate timeline matters, what whale activity is revealing, and why separating short-term market reactions from long-term structural shifts is critical for understanding where XRP could be headed. Right now, many investors are asking the wrong questions. Instead of asking whether XRP is about to break out, the better question is whether the regulatory environment around XRP is fundamentally changing. Because if the legal framework changes, the conversation shifts from short-term speculation to long-term market structure. That's exactly why the latest developments surrounding the Clarity Act have become one of the biggest stories in crypto. Recent comments from Senate leadership have lowered expectations for a quick legislative victory before the August recess. And the market responded almost immediately. XRP pulled back as traders reassessed the timeline. But beneath the surface, large holders have continued accumulating, creating a sharp contrast between market sentiment and on-chain positioning. That disconnect is what makes this moment so important, ladies and gentlemen. Throughout this video, we'll examine what the Clarity Act could actually change, why procedural votes may matter as much as the final vote itself, how institutions are likely to view the regulatory clarity, and what signals investors should be watching as this story continues to unfold. Ladies and gentlemen, if you want the satellite perspective on XRP and crypto and want to cut through the daily chaos and noise, subscribe to the channel. I break it down simply so you can see what actually matters in the market. Now, here's where it gets interesting. The discussion surrounding XRP has evolved far beyond retail speculation. Today, it's increasingly becoming part of the much larger conversation about financial infrastructure. Ripple has spent years building payment technology designed to improve cross-border transactions. Whether institutions ultimately choose XRP itself, stablecoins, traditional banking rails, or some combination of technologies remains an open question. But supporters argue that if XRP receives greater legal certainty, institutions that previously stayed on the sidelines may at least be willing to evaluate it without the same regulatory concerns. That's an important distinction, ladies and gentlemen. See, adoption isn't guaranteed. Investment isn't guaranteed. But removing uncertainty changes the conversation. Let this sink in. Marinate on this. Markets don't always move because something becomes perfect. Sometimes they move because uncertainty begins to disappear. History has shown this pattern before. During the Industrial Revolution, the rapid expansion of railroads transformed commerce across entire nations. But one of the greatest challenges wasn't building the rail lines themselves. It was standardizing them. Different regions often use different track gauges, making transportation inefficient and limiting economic growth. Only after governments and industries gradually adopted common standards did rail networks become truly interconnected, unlocking far greater economic activity. Today's digital asset industry faces a different challenge, but one that echoes the same principle. Technology may already exist. Innovation may already be happening. But without clear standards and predictable rules, large-scale participation becomes much more difficult. Regulatory clarity doesn't guarantee success. Yet history suggests standardized systems often encourage broader adoption than fragmented ones. That brings us back to Washington. In recent weeks, optimism surrounding the Clarity Act encountered an unexpected obstacle. Senate Majority Leader John Thune indicated that legislation is unlikely to reach final passage before the Senate's August recess. For many XRP investors, that wasn't the news they were hoping to hear. Markets reacted almost immediately. Sentiment weakened, momentum slowed, and XRP pulled back after traders reassessed the likelihood of a near-term legislative breakthrough. That reaction highlights something important. Crypto markets don't simply respond to fundamentals. They also respond to expectations. When investors anticipate positive news, prices often begin moving long before anything officially happens. Likewise, when expectations are delayed, even if the long-term outlook remains unchanged, markets frequently adjust. That's exactly what appears to have happened following the latest developments. But here's what most people miss, unfortunately. A delayed timeline is not necessarily the same as a failed outcome. Let this sink in. Gucci conviction, Gucci clarity, baby. Legislation rarely moves in perfectly straight lines. Major financial reforms often involve negotiations, revisions, procedural votes, and compromises that take months or even years to complete. Current expectations among many observers suggest that Clarity Act still has a path forward, although the timeline has become more uncertain. Rather than final approval before the August recess, attention is increasingly shifting towards the possibility of additional Senate activity later in the year, potentially during a post-election lame duck session. That distinction matters because markets continuously price probabilities. If investors begin believing legislation still has a realistic chance of passing, even if later than originally expected, the market reaction could look very different from a scenario in which the bill loses momentum entirely. And that is why every procedural update is now being watched so closely, ladies and gentlemen. One of the biggest signals investors are monitoring isn't actually the vote. It's what happens before the vote. In the U.S. Senate, major legislation typically moves through several procedural stages before reaching final passage. Leadership decisions about scheduling floor time, advancing debate, or filing the necessary procedural motions can all provide clues about whether lawmakers intend to prioritize a bill. This is very important, ladies and gentlemen. See, supporters of the Clarity Act believe that even initiating these early steps before recess would demonstrate that the legislation remains active despite the delays. In other words, taking the PhD out of PhD, the process itself may become almost as important as the outcome. Markets often react to momentum long before certainty arrives. If procedural activity begins accelerating, investors may interpret that as a signal that negotiations are progressing behind closed doors. If those signals remain absent, uncertainty could continue weighing on sentiment in the short term. Either way, the legislative calendar has become nearly as important to some XRP investors as the price chart itself. While political headlines dominate the news cycle, another story quietly unfolded beneath the surface. Large holders, often referred to as whales, continued increasing their XRP positions. Blockchain data cited by market analysts has pointed to growth in whale-controlled wallets over recent weeks, while significant amounts of XRP have reportedly moved off exchanges. Although no one can know the intentions behind every large transaction, many analysts view exchange outflows as a sign that some investors are positioning for long-term holding rather than immediate selling. This is very important, ladies and gentlemen. That doesn't guarantee higher prices. Whales can be wrong. Institutions can change their minds. But market participants pay close attention because large investors often have longer investment horizons than short-term traders. And when their behavior diverges from market sentiment, it naturally attracts attention. Because sometimes the smartest money isn't chasing headlines. No, it's quietly preparing for what might come next. Now, this is where the story shifts from politics to capital. One of the biggest reasons the Clarity Act has captured so much attention isn't simply because it could change or settle a regulatory debate. It's because supporters believe regulatory certainty could unlock entirely new pools of institutional money. Today, many of the world's largest investment firms operate under strict compliance frameworks. For allocating capital to any asset, they need to confidence that the legal treatment of the asset is well understood. Compliance departments, legal teams, and risk committees all play a role in determining whether an investment is eligible for consideration. This is massive. See, if uncertainty remains, many institutions simply wait. If clarity improves, the conversation changes. That doesn't mean billions of dollars suddenly flood into XRP overnight. Capital tends to move gradually, often beginning with research, followed by pilot allocations, and then larger commitments if confidence continues to build. Some market analysts have suggested that clear regulations could eventually support greater institutional participation, including the possibility of future exchange-traded products tied to XRP if other regulatory requirements are met. Others believe those estimates are overly optimistic. The important takeaway is this. Legal clarity doesn't create demand by itself, but it can remove one of the biggest reasons institutional investors stay away. This is also why so much money has been spent lobbying for crypto legislation. Industry groups, technology companies, financial firms, and advocacy organizations have invested heavily in educating lawmakers and shaping policy decisions and discussions over the past several years. That level of spending reflects more than short-term market excitement. It reflects the belief that the rules established today could influence how digital assets are integrated into the financial system for years to come. See, for companies building a blockchain infrastructure, the stakes extend far beyond the next bull market. They're thinking about the next decade. Will businesses have confidence to build? Will banks participate? Will asset managers launch products? Will payment companies expand blockchain payment services? Those are the questions lawmakers are indirectly helping to answer. And regardless of where someone stands on crypto, there's little disagreement that regulatory certainty tends to encourage investment more effectively and efficiently than prolonged uncertainty, ladies and gentlemen. Uncertainty is like the killer of anything in investments. But here's where investors need to separate hope from probability. There's a tendency in financial markets to assume that one major event will instantly transform everything. Reality is usually much more gradual. Even if the Clarity Act were to become law, institutions wouldn't suddenly wake up the next morning and deploy billions into XRP. Due diligence takes time. Investment committees meet on schedules. Products require approvals. Risk models have to be updated. History shows that structural changes often unfold over months and years, not days. That's why experienced investors often distinguish between catalysts and trends. A catalyst starts a conversation. A trend develops over time. If regulatory clarity improves, the immediate market reaction could be significant, but the broader institutional impact would likely be measured over a much longer horizon. That's the difference between excitement and structural change. Short-term noise, long-term structure. History offers another fascinating example. In 1933, following years of financial instability during the Great Depression, the United States introduced sweeping banking reforms, including the creation of federal deposit insurance. Before those reforms, public confidence in banks had been severely damaged. Bank runs had become common as people rushed to withdraw their savings out of fear that institutions would fail. The introduction of clearer rules and stronger protections didn't instantly solve every economic problem, but it fundamentally changed confidence in the banking system. Over time, that confidence became one of the foundations supporting decades of financial growth. See, today's crypto market is obviously very different, yet the underlying principle remains remarkably similar. Markets often expand, not simply because technology improves, but because confidence in the rules governing the technology improves alongside it. That's why regulatory developments sometimes become just as important as technology and technological breakthroughs. See, meanwhile, XRP itself has continued responding to every shift in the political narrative. After optimism surrounding legislative progress cooled, the market experienced a noticeable pullback, unfortunately. Support levels became increasingly important as traders looked for areas where buying interest might return. Technical analysts point to several price zones that could influence short-term momentum. If support continues holding, some traders believe buyers may attempt another push higher. If those levels fail, additional downside could become possibly before stronger demand reappears. Technical analysis isn't a crystal ball. It doesn't predict the future. Instead, it identifies areas where market participants have historically made decisions. Think of these levels less as guarantees and more psychological battle lines between buyers and sellers. As always, unexpected news, especially from Washington, could quickly change the technical picture. And here's where it gets interesting. Despite the volatility, blockchain activity has continued drawing attention. Several market observers noted that large wallet balances have increased over recent weeks. While notable amounts of XRP have reportedly left major exchanges, this behavior is often interpreted as a signal that some investors prefer holding assets in private custody rather than keeping them available for immediate trading. Again, that's not proof that prices will rise, ladies and gentlemen. This is important to understand. Large investors sometimes accumulate before being wrong. Markets have humbled even the biggest institutions countless times. But these moments become important because they provide another piece of the puzzle, the moments and movements. Remember that. On one sideline, headlines suggest uncertainty. On the other, some large holders appear comfortable increasing the exposure. When those two narratives diverge, investors naturally begin asking whether the market is seeing something that isn't yet obvious. Sometimes the answer is no, sometimes it's yes. Only time reveals which interpretation was correct. Another factor making this period especially important is the broader evolution of digital assets. See, the crypto industry today looks very different from just a few years ago. Institutional custody has expanded. Major financial firms have explored tokenization. Stablecoins have become increasingly integrated into payment discussions. Traditional banks are experimenting with blockchain technology in ways that once seemed unlikely. In other words, XRP isn't being evaluated in isolation. It's being evaluated within an industry that has matured considerably. That context matters because legislation rarely affects just one asset. Clear rules for one segment of the market often influence confidence across the broader ecosystem. Investors are watching XRP closely, while policymakers are ultimately making decisions that could reshape how digital assets interact with the traditional financial system as a whole. And that's a much bigger story than any single cryptocurrency, ladies and gentlemen. Still, optimism should always be balanced with realism. Supporters of XRP, the anointed one, often emphasize the opportunities that greater regulatory clarity could create. Critics point out that adoption ultimately depends on whether businesses and financial institutions could choose the technology at scale. Those are two separate questions. Legislation can reduce legal uncertainty. It cannot force adoption. The market will ultimately decide whether XRP's utility translates into sustained demand over the coming years. That's why investors should avoid treating any single political event as a guaranteed turning point. Instead, it's better viewed as one important chapter in a much longer story, one that continues to evolve with every regulatory decision, institutional announcements, and technology and technological development. And as that story unfolds, the next few months may provide and prove to be some of the most closely watched in XRP's history. But before anyone assumes the outcome is already written, it's important to understand and consider the other side of the equation. Markets don't move based on only what could happen. They also react to what doesn't happen. If the Clarity Act ultimately stalls or fails to gain enough support, uncertainty could remain a defining feature of the XRP narrative. Some analysts have warned that a prolonged lack of regulatory clarity could continue limiting institutional participation, while others believe XRP's existing ecosystem would allow it to keep developing regardless of the bill's fate. Those are very different outlooks, and that's why investors should be very careful not to confuse conviction with certainty. Even in a bearish scenario, Ripple's payment technology will continue operating. The company has already demonstrated that many of its enterprise solutions can function in different ways, depending on the needs of financial institutions. The larger question is whether XRP itself becomes a central part of the long-term adoption story. That's where opinions begin to diverge. Some market commentators have argued that without meaningful regulatory progress, XRP could revisit significant lower price levels during a broader crypto downturn. Others believe the asset has matured enough since the last major bear market that history won't repeat itself in the same way. The truth is that nobody really knows, ladies and gentlemen. Crypto has repeatedly surprised both the most optimistic bulls and the most confident bears. We've seen digital assets recover after being written off. We've also seen projects with enormous hype lose momentum almost overnight. That's why risk management matters just as much as opportunity. Successful investors don't prepare for only one outcome. They prepare for multiple possibilities, because markets reward discipline far more than certainty, ladies and gentlemen. Here's an analogy we're thinking about. Imagine an ancient harbor sitting at the crossroads of major trade routes. Merchants from every direction arrive with valuable goods, but the harbor lacks a reliable lighthouse. Ships hesitate, some turn back, others anchor offshore, waiting for better visibility before entering. Now imagine that lighthouse is finally built. The lighthouse doesn't create the merchants. It doesn't manufacture the goods, and it doesn't guarantee every voyage will be profitable. What it does create is confidence. Confidence encourages more ships to enter the harbor, more traders to participate, eventually more commerce to take place. Supporters of regulatory reform believe legislation can serve a similar purpose for digital assets, not by guaranteeing success, but by improving visibility for participants who have remained cautious. Whether that confidence ultimately translates into sustained adoption is something only time can answer. That brings us back to what investors should actually be watching over the coming months. First, pay attention to the legislative calendars. Announcements regarding Senate floor scheduling, procedural motions, or renewed negotiations could provide important clues about whether momentum is building again. Second, monitor institutional developments rather than focusing exclusively on daily price movements. Are major financial firms discussing digital assets more openly? Are new investment products being proposed? Are payment companies expanding blockchain initiatives? Those developments often tell a much bigger story than a single trading session. Third, continue watching on-chain activity. Whale accumulation, exchange inflows, exchange outflows don't predict the future, but they help investors understand how different groups of market participants are positioning themselves. Combined with regulatory developments, they can provide a more complete picture of market sentiment. This is where another historical comparison becomes useful. Think about the construction of a medieval cathedral. People often admire the finished structure, but they rarely think about the decades spent laying foundations, carving stone, and assembling frameworks long before the tallest towers ever appeared. Financial systems evolve in much the same way. The most visible moments, the headlines, the price rallies, the legislative votes often receive the most attention. But those moments are usually built on years of quieter structural work taking place behind the scenes. Today's crypto industry appears to be going through a similar process. Companies developing infrastructure, institutions are exploring blockchain applications, lawmakers are debating regulatory frameworks. Markets are adjusting to each new piece of information. The foundation is still being built, and whether XRP becomes one of the defining assets of the future remains one of the biggest questions investors are trying to answer. So where does that leave XRP today, ladies and gentlemen? It leaves it at a fascinating intersection of politics, regulatory technology, regulation, and market psychology. On one side, there's a genuine optimism that greater legal clarity could reduce uncertainty and encourage broader institutional participation over time. On the other, there's still meaningful legislative hurdles, competing priorities in Washington, and no guarantee regarding when or even the current proposal becomes law. That's why the next few months may prove more important than many investors realize. Not necessarily because they will produce an immediate outbreak or breakout, but because they may reveal the direction of travel for years to come. Remember this. Prices are reacting, but the systems are evolving. Short-term headlines may continue creating volatility. Long-term structural developments are what many investors will be watching closely. As always, ladies and gentlemen, the smartest approach is stay informed rather than stay emotional. Markets reward patience, they reward preparation, and they reward investors who can separate confirmed developments from speculation. Whether you're bullish on XRP, skeptical of its long-term prospects, or simply interested in how digital assets are reshaping finance, the legislative process unfolding in Washington is worth following because its impact could extend far beyond one cryptocurrency. It could influence how digital assets fit in the global financial systems for years to come. If you made it this far, let me know your thoughts in the comments. Do you think regulatory clarity will become the catalyst that transforms institutional adoption? Or do you believe that market is placing too much emphasis on a single legislation? I'd love to hear your perspective. If you've enjoyed this deep dive, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our latest analysis on crypto, macroeconomics, and the forces shaping the future of finance. Thank you for watching, ladies and gentlemen. I'll see you in the next one. Hope everyone's having a blessed Saturday. I want to welcome all the new members of the Crypto Public Desk Monthly, all the new members of the membership channel. Ladies and gentlemen, my thesis for what's happening right now has not changed. Again, all eyes are going to be on the dollar right now. Watch the DXY, watch the yields on the treasuries. That will dictate everything. As oil rises because of the conflict and it looks like it could escalate, that will cause the prospects for inflation to grow and potential talking of an interest rate hike to come. I'm not in the camp that interest rate hike is coming, but I do think that there's a double bottom forming in gold around 4,000. I think it looks good there. Not financial advice, just my own opinion. See, volatility is the long-term trader's friend. I think right now is a perfect time to accumulate. That's what I'm doing, and that's what we're advising anyone retains any capacity. Things are on sale. But as the chaos that's here right now unfolds, the market gets used to it. If you get used to the scenarios, that's what it is. Ladies and gentlemen, if you want to take advantage of what's happening right now, come and join the Crypto Public Desk Monthly. One tip from the pits can pay for your entire year. Come and join over 620 active traders invested inside the Crypto Public Desk Monthly. Members enjoyed between 50 to 150% returns during the last act of kinetic warfare in the Middle East. This act is going to be bigger as far as we're concerned. So if you want to take advantage of all this, come and join us there. But this is what I think as well. You don't want to get caught up like sushi right here. As the remora, we swim underneath the apex predator. We feast on sushi. People are going to be getting caught up like sushi. If you don't have a hardcore plan right now, you're dead in the water, unfortunately. At the time of this recording, oil looks like it's going to move a little bit higher. The DXY sitting at 101.46. That's high. The 10-year treasury yields even higher. Mortgages are the highest this year. Understand the market's going to key off the systematic risk that's coming. You can't diversify certain things out of your portfolio. Normally, you could diversify certain things. You can't diversify, as far as I'm concerned, tweets. That's impossible because a tweet is going to move faster than any financial maneuver you can do. I need you to dig deep down and get this Gucci conviction, this Gucci clarity here right now. XRP is the anointed one. ICP is there too. Don't get shaken out of what's going to happen and why. And I tell you this because there is chaos in the markets. I remember when we started doing our first solvent extraction electrowinning plant in Indonesia, people thought we were nuts. But there's a fine line between insanity and genius. This market, you have to keep this Gucci conviction, this Gucci clarity. Understand this right now. Why I say we're up this frosty march, up this frosty mountain with our frosty beverage, because your convictions will be tested day in, day out. I believe, and this is my personal opinion, not financial advice, things will be passed. There's too much at stake. We were mocked for certain things. We had all kinds of problems with the first solid traction electrolyte refinery plant. We were laughed at. Now I do the laugh. I laughed. I laugh at everybody that laughed at us. But it's not about that, because at the end of the day, it's about getting ahead for your family, yourself, the future you want to have. It's about preparing for retirement. Ladies and gentlemen, you can borrow money to buy a house. You cannot borrow money for your retirement. Understand this. So what you do today plants the seeds for tomorrow. I really do believe that there's more turbulence coming. I am personally using these pullbacks and the chaos to add to my long-term positions. We're advising family offices and the families to do the same. But this is in a broad base of everything. Volatility is the long-term trader's friend. But there's so much going to happen here right now, because there's a response, there's no response. I think this, and this is the truth of the matter, I think it gets past. I've been saying this for a long time. I don't get shaken out. I have my convictions, and I understand why. It's more important to be in position than not. But if kinetic action heats up, which you have straight days of fighting, the dollars are going to rally. And as the dollar rallies, everything else will get crushed. Commodities are priced in dollars. They rise. The metals are being viewed not as, oh, yeah, that's going to go higher. They're getting crushed too. But I believe that there's a double bottom forming in place right there. We're preparing to go long in places, in the metals, in gold, silver, mostly gold. But again, we look at things very differently because we run refineries. So we actually hedge the metals. So there's a difference of what we're seeing and why. But there's so many opportunities right now to take advantage. I love you all. I'll see you on the front lines. This isn't financial advice. This video is for entertainment, educational purposes only. Always consult a financial advisor. Never, ever invest any money based on watching a YouTube video. Don't do it. Never invest any money based on watching YouTube videos. You don't want to do that. Write this down. DXY going up, oil going up, everything else going down. Underneath that, write this down. Are you going to take advantage of this? Yes or no? Underneath that, what's your plan for the future? Underneath that, will you feel terrible if you miss out on the greatest transfer of wealth ever taking place because things are changing? I can't answer these questions for you, ladies and gentlemen. That's a question you have to answer yourself. If you're in the crypto markets, you've answered these questions, because most of the world doesn't get involved in crypto. You got the BRICS and the unit, they're talking about CBDCs. They think stable coins are bad. On our side of the trench, we look at CBDCs as you're doing bath salt. Ladies and gentlemen, it's always the darkest before the dawn. It's always the calmest before the storm. Investing is nothing more than a lightning bolt. It will hit the lightning rod and ground out. I love you all, ladies and gentlemen. I'll see you on the front lines. But if you want to learn to trade, you want to learn to invest, come and join over 620 active traders and investors. It doesn't matter where you are in your journey. It doesn't matter. What matters is that you want to learn. I love you all, ladies and gentlemen. Keep that Gucci conviction, that Gucci clarity. Don't get negged out that prices are going down. Don't get negged out. I need you to remember why you started this. Get excited. That chaos leads to something good. Get excited. I'll see you on the front line. I love you all.